Buckle up, everyone. We're going deep on cryptocurrency today, like really deep. Think Bitcoin, blockchain, the whole shebang. By the end of this, you'll be dropping crypto knowledge like a pro.
We've got a mountain of resources to help us out. Beginner guides, insights for the heavy hitters like Coursera and Gemini, even some takes from SUNY, Oswego, and eToro.
So picture this. 2010, someone buys 2 pizzas with Bitcoin. Totally normal, right? Except if they held on to that Bitcoin. Well, let's just say pizza night would be a little more extravagant today. That's the kind of wild ride we're talking about here. But before we get ahead of ourselves, let's start with the basics. What is cryptocurrency?
It's digital money. Think of it like online cash, but with some serious upgrades. The big one, cryptography. It makes counterfeiting practically impossible. Oh, and it operates totally outside of banks and governments.
Yeah.
It's all thanks to this revolutionary tech called blockchain.
Ah, blockchain, the word on everyone's lips. Our sources describe it as a decentralized ledger, basically a digital record of every single transaction. How does that even work?
Imagine a giant public spreadsheet. It tracks every cryptocurrency transaction. And this spreadsheet is copied across a huge network of computers. No single point of failure, no central control. When you make a transaction, it's broadcast to the whole network. And then these special folks, sometimes called miners, jump in to verify it.
So no more waiting on hold with the bank. I'm already liking this. What are these miners actually doing, though?
Think of it as a digital race. They're solving super complex math problems to verify the transaction. The winner gets to add the transaction to the blockchain, and, here's the kicker, gets rewarded with cryptocurrency.
It's like a self-governing system with rewards built right in. Pretty ingenious. And each transaction added to the blockchain becomes a permanent record. That's what our sources emphasize, the transparency and security.
It's the beauty of blockchain. A public record open for anyone to audit. It creates trust and cuts out the need for a central authority entirely.
Okay, blockchain, got it. But there are like thousands of cryptocurrencies out there. How do we even start to wrap our heads around all of them?
Our sources break it down into 3 main categories: Bitcoin, altcoins, and tokens.
Bitcoin, the one everyone's heard of, the OG, right. Even an event like Bitcoin halving in 2024 is making waves in the market, according to our sources.
Exactly. Bitcoin kicked off this whole revolution of decentralized digital currency. It's still the most recognizable, the most traded. It's often called digital gold because of its limited supply.
So Bitcoin stands alone. What about these altcoins? What makes them different?
All the cryptocurrencies that aren't Bitcoin, basically. Some are trying to improve on Bitcoin's tech, faster transactions, lower fees, that kind of thing. Others have very specific purposes, like facilitating international payments or even powering decentralized applications.
So it's like a whole ecosystem of innovation, each altcoin trying to carve out its own niche. Any examples that come to mind?
Ethereum's a great one. It's not just a currency. It's a whole platform for building decentralized applications, or dApps. And it uses these things called smart contracts.
Hold on, we're not just talking about digital money anymore. Things are getting complicated. What are these smart contracts?
Imagine a vending machine, but for literally anything. A smart contract is a self-executing agreement, written in code. It automatically carries out the terms when certain conditions are met. No middlemen needed.
Like automating trust, that's a game changer. And these smart contracts are driving a wave of innovation in the crypto world. Things like DeFi and NFTs, right?
Yeah, to DeFi. Or decentralized finance is trying to rebuild traditional financial services on a blockchain. Think lending, borrowing, but without the banks. And NFTs, those non-fungible tokens, unique digital assets. They can represent anything: art, collectibles, even virtual real estate.
Okay, my mind is officially blown. Bitcoin, the OG, altcoins, each with their own spin, and this whole world of applications built on blockchain. But before we get lost down the rabbit hole, what about those tokens? The third category, how are they different from coins?
Think of coins, like Bitcoin or Litecoin, as having their own countries, their own blockchains. Tokens are like the citizens of those countries. They operate on those existing blockchains, often with a specific role within a project or ecosystem.
So it's a matter of independence. Coins are the foundation, tokens are built on top. What kinds of tokens are out there?
You've got utility tokens, which give you access to a product or service. Imagine a token that lets you stream movies on a decentralized platform. Then there are security tokens, more like digital stocks or bonds. They represent ownership. And finally, governance tokens. Those give holders voting rights within a project, like digital democracy.
Okay, coins as the base, then a whole range of tokens with different functions. Starting to click. But every coin has 2 sides. What are the pros and cons of all this? What makes cryptocurrency so appealing in the first place?
Our sources highlight a lot of advantages. Lower transaction costs, especially for international transfers. And because it's decentralized, anyone with an internet connection can participate no matter where they are or their banking status.
So it's potentially more accessible and inclusive than traditional finance.
Absolutely. And then there's the transparency. Every transaction is recorded on the blockchain, publicly and permanently. Makes manipulation or fraud incredibly difficult.
No more shady dealings behind closed doors. Love that. What else?
Speed and efficiency are huge. Transactions happen within minutes, no matter where you are in the world. And they're secure by design, thanks to that cryptography we talked about.
Faster, cheaper, and more transparent than traditional methods. I can see why people are excited about this.
And there's more. Many cryptocurrencies have a limited supply, which makes them potentially resistant to inflation, unlike traditional currencies that governments can just print more of.
Like a hedge against economic uncertainty. I bet that appeals to a lot of people. What else is driving this crypto craze?
It's also about the innovation. Cryptocurrency isn't just about money. It's a breeding ground for new ideas and technologies, things like DeFi, NFTs, and decentralized governance systems.
Lower costs, greater accessibility, increased transparency, faster transactions, potential inflation resistance, and a wave of innovation. That's quite a list. But surely there are some downsides, right? There's no such thing as a free lunch.
You're absolutely right. Cryptocurrency comes with its own set of risks. The biggest one is probably volatility. Prices can swing like crazy, sometimes within a single day. It's a risky investment if you can't stomach the ups and downs.
It's definitely a roller coaster. What other concerns should people be aware of?
Security is a big one. While blockchain is incredibly secure, the platforms and wallets where people store their crypto can be vulnerable. We've seen exchanges get hacked, millions of dollars worth of crypto stolen.
A reminder that the digital world isn't immune to crime. What steps can people take to protect themselves?
Choosing a reputable platform with strong security is key, but you also need to take your own precautions. Strong, unique passwords for all your accounts, two-factor authentication whenever possible, and be wary of those phishing scams and suspicious links.
Like protecting your digital gold. Any other risks we should flag for our listeners?
The lack of regulation is a tricky one. It's great for fostering innovation, but it also means less protection for investors if something goes wrong. It's a bit of a Wild West out there.
Buyer beware, right. It sounds like due diligence and a healthy dose of skepticism are essential in the crypto world.
Absolutely. And one more thing, cryptocurrency isn't universally accepted yet. More businesses are starting to take it, but you can't use it everywhere. Not yet, anyway.
So it's early days, but tons of potential. And of course, some significant risks. Speaking of potential, our sources mentioned that 20% of all Bitcoins are estimated to be lost, like gone forever.
It's mind-boggling. Imagine losing a hard drive with millions of dollars worth of Bitcoin on it. Poof, gone.
What does that mean for the future of Bitcoin?
Well, with fewer Bitcoins in circulation, the scarcity factor goes up. Could potentially drive the price up, but it also highlights the importance of secure storage and remembering that crypto transactions are irreversible.
It's a whole new paradigm, new rules, new challenges. Okay, we've covered a lot in this first part of our deep dive. From what cryptocurrency is, to the complexities of blockchain, to the different types of coins and tokens out there. We even touched on the pros, the cons, and some pretty mind-blowing stats.
We've definitely laid the groundwork for understanding the cryptocurrency landscape. But the journey doesn't end here.
You're right. There's so much more to explore, especially some of the events and trends shaping the future of this space.
Welcome back to the deep dive. Ready to uncover more crypto secrets?
Absolutely. Our sources kept bringing up this Bitcoin halving. Sounds pretty intense, but I'm not really sure what it is. Does Bitcoin literally get cut in half? Like some digital magic trick?
Not magic, but definitely some clever design. Remember how Bitcoin has a limited supply, 21 million coins? Well, Bitcoin halving is a mechanism built into the code that controls how quickly new coins are created.
Okay, so there's a schedule for releasing new Bitcoins. How does it work?
Every 4 years, the reward miners get for verifying transactions gets chopped in half. It started at 50 Bitcoins per block back in 2009, then 25 in 2012, 12.5 in 2016. Now we're at 6.25. The next halving is coming up in 2024. The reward drops to 3.125 Bitcoins.
So the miners get paid less and less for doing the same work. That doesn't seem very fair.
It might seem counterintuitive, but this halving mechanism is actually crucial for Bitcoin's long-term stability, for its value. By slowly reducing the rate of new Bitcoin creation, it keeps the supply limited. Remember the whole digital gold idea. Scarcity is key.
So it's like a controlled release, preventing inflation and keeping Bitcoin valuable. But why should the average person care about Bitcoin halving?
Well, historically, Bitcoin's prices surged in the months leading up to and after a halving event. It's not a guarantee, but the logic is simple. Supply decreases, demand stays the same, or increases, price goes up.
Basic economics. But it's not just about price, right? This halving affects the miners too.
Exactly. Each halving makes mining less profitable. Could lead to some miners shutting down, especially those with older equipment or higher energy costs.
Yeah.
It's like survival of the fittest. Pushes the whole industry towards more efficiency, more sustainability.
So a natural selection process? The weaker players drop out, the ones who stay have to get smarter, more efficient, in a way that benefits the entire Bitcoin network, right? Makes it more secure, less energy intensive.
That's a great way to put it. A stronger network benefits everyone who uses Bitcoin. Makes it more credible as a reliable, valuable asset.
Okay, Bitcoin having decoded. It's amazing how this technical event has such a ripple effect. We've talked a lot about the theory of crypto. What about the real-world uses? How are people actually using this stuff?
That's the exciting part. It's not just an investment or speculation. People are using crypto in more practical ways every day. One of the most obvious is for payments. More businesses are starting to accept Bitcoin, other cryptocurrencies as payment for goods and services.
I've even seen cafes and restaurants in my area accepting Bitcoin. It's slowly becoming part of our everyday lives. But what about those more complex applications, like DeFi? Our sources mention it as a game changer in the financial world.
DeFi stands for decentralized finance. It's essentially rebuilding traditional financial services, things like lending, borrowing, trading, but on a blockchain platform. The key difference, it cuts out the middlemen. Banks, financial institutions, gives users more control over their assets, potentially offers lower fees, greater transparency.
So it's like a peer-to-peer financial system powered by blockchain. That's pretty disruptive. What can you actually do with DeFi?
The possibilities are huge and always evolving. Decentralized exchanges, or DEXs, let you trade cryptocurrencies directly with other users, no central authority needed. Lending platforms let you earn interest on your crypto or borrow against it. You can even invest in liquidity pools. Think of them like digital co-ops that facilitate trading and offer returns to participants.
It's like a whole new financial ecosystem is emerging, one that's more accessible, transparent, maybe even more equitable. But how easy is it for the average person to get involved with DeFi? It all sounds pretty complex.
There's definitely a learning curve, but user-friendly platforms and apps are emerging that make it easier for everyone. Think of it like the early internet. Started complex and technical, but then it became user-friendly, accessible to everyone. Same thing's happening with DeFi.
That's encouraging. Okay, so everyday purchases, a revolution in finance with DeFi. What other cool applications are out there?
Cross-border payments are another area where crypto is making waves. Remember those annoying fees and delays with international transfers? Crypto offers a faster, cheaper, more efficient way to send money across borders. Could revolutionize remittances, global trade.
It's like sending an email instead of a snail mail letter. No more waiting weeks for a bank transfer. That's a game changer for individuals and businesses, especially in places where traditional financial systems aren't great. But our sources suggest crypto's potential goes way beyond finance.
You're right. It's being explored for supply chain management, creating transparent and secure systems for tracking goods from beginning to end. New voting systems that are harder to manipulate. Digital identity solutions that give individuals more control over their data.
It's amazing to see how this tech is branching out into so many different fields. It's like a digital Swiss Army knife, a tool for almost every problem. But with all this potential, choosing the right platform for buying, selling, storing your crypto is crucial.
Absolutely. Tons of platforms out there, but they're not all created equal. It's just like choosing a bank. You want one that's secure, reliable, with a good reputation.
So what are the key things to look for when choosing a crypto platform?
Security is paramount. Look for platforms that have robust security measures, things like two-factor authentication, cold storage for most of their assets. You want to be confident your investments are safe from hackers.
Makes sense. What else should we consider?
Ease of use is important, especially if you're new to crypto. Look for platforms with intuitive interfaces, clear instructions, helpful customer support. You don't want to get bogged down in jargon or struggle to use the platform.
Definitely. It should be a tool that empowers you, not frustrates you. Anything else?
The range of cryptocurrencies supported is also important. If you're interested in exploring beyond Bitcoin and Ethereum, Make sure the platform offers a good selection of altcoins and tokens that match your interests and goals.
It's like picking a grocery store, right?
Fact.
You want variety, not just the basics. Anything else.
Fees can vary a lot between platforms. Compare trading fees, deposit fees, withdrawal fees before you decide. You don't want to get hit with hidden costs.
Good point. And reputation matters too, right?
Absolutely. Do your research, read reviews. Look for platforms with a proven track record of security, reliability, transparency. It's like choosing a financial advisor. You want someone you can trust.
So security, ease of use, a wide selection of cryptos, reasonable fees, and a solid reputation. Those are the key things to look for when choosing a platform. Any other advice for someone just starting their crypto journey?
Stay informed. The crypto world is constantly evolving. Read industry news, follow reliable sources on social media, be prepared to adapt because things change quickly.
It's like learning a new language. You need to immerse yourself, keep up with the latest trends and vocab. But with all the excitement around crypto, it's crucial to remember the risks.
Absolutely. We touched on some of them earlier. Price volatility, security concerns, lack of regulation. It's important to see beyond the hype and really understand the downsides before jumping in.
Let's dive into those risks a bit more. Price volatility seems like a major concern for anyone thinking about crypto. Just how volatile are we talking?
Crypto prices can swing wildly, sometimes in hours or even minutes. All sorts of things can drive this volatility, from market sentiment and news to regulatory changes and tech advancements.
Definitely not for the faint of heart. What other risks should we be aware of?
Security is a big one. While blockchain technology itself is super secure, the platforms and wallets where people store their crypto can be vulnerable to hacking. There have been some high-profile cases of exchanges being hacked, millions of dollars of crypto stolen.
So the digital world isn't immune to crime. What can people do to protect themselves?
Choosing a reputable platform with strong security measures is crucial, as we discussed. But you've got to take your own precautions too. Use strong, unique passwords for everything. Enable two-factor authentication whenever you can, and watch out for phishing scams and suspicious links.
Treat it like you're protecting actual gold. What other risks are out there?
The lack of regulation, as I mentioned before, is a double-edged sword. It's great for innovation, but it also means there's less protection if something goes wrong. It's like the Wild West out there.
Buyer beware. Sounds like due diligence and a healthy dose of skepticism are key when navigating the crypto world. Any other red flags to look out for?
Scams and fraudulent activities are a real concern. Be wary of promises that sound too good to be true. Quick riches, guaranteed returns. Do your research. Only invest in projects you understand.
It's the same advice for any investment, but it's especially important with crypto, where things move fast and there's a lot of hype and misinformation. Speaking of misinformation, one thing we hear a lot about is the environmental impact of cryptocurrency. Can you shed some light on that?
It's a valid concern, especially for cryptocurrencies that rely on energy-intensive mining processes, like Bitcoin. The amount of electricity used for Bitcoin mining is huge, comparable to the energy consumption of entire countries.
Wow, that doesn't sound very sustainable. Are there any efforts to make it better?
The industry is becoming more aware of the problem. There are movements towards more energy-efficient methods, like proof of stake, which uses way less energy than the proof-of-work system that Bitcoin uses. Some cryptocurrencies are also looking into renewable energy sources for mining.
So there's hope for a greener crypto future.
Definitely. As the technology evolves and awareness grows, we'll see more sustainable practices in the crypto space. But it's important to remember this is still a relatively new technology. There's a lot of uncertainty about its future. It might not gain mainstream adoption, or governments could crack down on its use.
So the future of crypto isn't guaranteed. Still many challenges ahead. But for those willing to embrace the risks and navigate the complexities, it offers a potentially transformative way to interact with finance and beyond.
High risk, high reward, full of exciting possibilities, but potential pitfalls too.
Okay, we've covered a lot in this second part of our deep dive. We tackled Bitcoin halving, dove into the real-world uses of crypto, discussed choosing the right platform, and addressed the risks and challenges that come with this new technology. But before we wrap up, let's circle back to something you mentioned earlier: lost Bitcoins.
Ah, yes. Fascinating and a bit alarming. Because cryptocurrency only exists digitally, often stored in digital wallets protected by private keys, if those keys are lost or forgotten, the crypto is gone forever.
It's like losing the combination to a safe filled with gold. Our sources mentioned as much as 20% of all Bitcoins could be lost this way. What does that mean?
It effectively shrinks the supply. which, like we talked about with Bitcoin halving, could drive up the price.
Yeah.
It also underlines how important it is to securely store your crypto and have a backup plan in case something happens to your digital wallet or your private keys.
With great potential comes great responsibility. But this brings up a bigger question. We've talked about the tech, the economics, the practicalities of crypto, but at its core, it's a fundamental shift in how we think about money.
That's a powerful point. It goes beyond the nuts and bolts, touches on something deeper. Our values, our beliefs, our vision for the future of finance.
Cryptocurrency is about decentralization, transparency, individual empowerment. It's about taking control of your financial destiny, participating in a system that's fairer, more accessible.
It's about challenging the way things are, exploring new possibilities for how we create, manage, and exchange value.
So as we wrap up this second part of our deep dive, I want to leave our listeners with a question to think about. Beyond the potential for investment gains or the convenience of digital transactions, what does cryptocurrency mean to you? How does it align with your values, your vision for the future of finance?
That's a great question to reflect on. It takes us beyond the technical details and into the realm of personal beliefs and aspirations. And ultimately, those beliefs and aspirations will shape the future of crypto more than any algorithm or market trend.
It's a journey of exploration, innovation, empowerment, and we're all invited to participate. But before we get ahead of ourselves, let's take a step back and address something I think a lot of people are curious about. We've covered buying, selling, using crypto, but what about actually creating one? Our sources mention it, but it's like a whole other level.
Definitely a step beyond just being a user,
Yeah.
like going from driving a car to building one.
Right.
Needs a different skill set.
Where do you even start? Is there like a cryptocurrency starter kit you can order online?
Not quite that easy. But the first step is actually pretty simple. Figure out your purpose. What problem are you trying to solve with your crypto? What need does it fill? What makes it stand out in a market that's already packed with thousands of options?
So like any business idea, got to have a solid concept, a reason for people to care.
Exactly. Once you've got that purpose nailed down, you have to pick the right blockchain technology. You could build your own blockchain from the ground up. That's a huge undertaking. Requires serious technical chops and resources.
Sounds like you'd need a whole team of developers, not just a solo project in your basement.
Definitely not for beginners. A more common approach, especially for those starting out, is to create a token on an existing blockchain, like Ethereum. It's more manageable, more cost-effective.
So instead of building the whole infrastructure, you're building on top of an existing one.
Perfect analogy. Ethereum's super popular for creating tokens because of its smart contract capabilities. Remember those self-executing agreements? They can be used to create and manage all sorts of tokens with different purposes and features.
Okay, so purpose, platform, check. What's next on our crypto creation checklist?
This is where things get technical. You'll need to dive into smart contract programming. Learn a special language like Solidity. It's not something you learned overnight, but there are tons of resources out there, tutorials, courses, even communities of developers who can help and share their knowledge.
So even if you're not a coding genius, there's a way to learn.
Absolutely. The crypto world is all about collaboration, open source development. There's this amazing community spirit of helping each other, pushing the boundaries of what's possible.
Okay, let's say our aspiring crypto creator has mastered the tech stuff and has a working prototype. What then? Time to launch? Become the next Bitcoin.
Hold your horses. Before you unleash your creation on the world, you need to make sure it's secure. Hiring independent security experts to audit your code, look for vulnerabilities, is essential.
Like getting a second opinion from a doctor before a big surgery. Got to make sure everything's good before you go ahead.
Exactly. And speaking of being in order, you also need to consider the legal and regulatory side of things. Crypto regulations are all over the place, different in every country. You need to make sure you're playing by the rules in your jurisdiction.
It's not just about the tech, it's about navigating the legal stuff too. Any other crucial steps before launch?
Launching a successful crypto is more than just having a good product. You need a whole strategy. Marketing, community building, attracting users and investors.
So just like any startup, got to create buzz, build relationships, convince people your product is worth their time and money.
Exactly. The crypto world is competitive. You need to stand out, show what makes your project valuable.
Creating a cryptocurrency is quite the journey. Technical skills, business smarts, legal awareness, a knack for marketing and community building. Not for the faint of heart, but it sounds incredibly rewarding.
It's like bringing a new digital entity into the world, watching it grow and evolve in this crazy crypto ecosystem.
That's a great way to put it. Even if creating a crypto isn't for everyone, this conversation highlights something important about the whole movement.
What are you thinking?
We've looked at the technical side, the financial side, the potential benefits and risks. But in the end, crypto is about more than just technology or money. It reflects our values, our beliefs, what we want the future to look like.
It's about moving away from centralized control, embracing transparency, empowering individuals, challenging the status quo, exploring new possibilities.
And it reminds us that we're not just watching this technological revolution happen, we're part of it. We're shaping the future with every choice we make, every action we take, every conversation we have.
We have the power to choose what kind of world we want to live in. Cryptocurrency is one of many tools we can use to build that world.
So as we wrap up our deep dive into cryptocurrency, I encourage you to think about the questions we've explored today. What role do you see crypto playing in your life, in the world? What are your hopes, your concerns about this technology, and how can you use your knowledge, your voice, to shape the future of this ever-changing landscape?
The journey continues. The future is in our hands.
Thanks for joining us on this deep dive. Until next time.